Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about COMMSCOPE Holding Company INC quarterly report. COMMSCOPE Holding Company Inc. provides a wide range of infrastructure solutions for various industries. The company's services include fiber optic and copper connectivity cable solutions for telecommunications, cable television, residential broadband networks, data centers, and business enterprises indoor cellular solutions, including public key infrastructure and Wi-Fi access points, Internet of Things suite on-premises, and cloud-based control and management systems, software and software-as-a-service applications addressing security, location, reporting, and analytics cable modem termination systems, video infrastructure distribution and transmission equipment, cloud solutions for facility-based service providers. The company serves various clients, including telecommunications operators, data center managers, cable television providers, and multi-system operators. The skyrocketing stock price of COMMSCOPE Holding Company Inc. In the past year, COMMSCOPE Holding Company Inc. NASDAQ, COM has experienced an astonishing surge in its stock price, with increases ranging from 130% to 159%. This remarkable growth can be attributed to several key strategic developments and news that have transformed the company's financial landscape. The sale of its connectivity and cable solutions segment for $10.5 billion has significantly improved COMMSCOPE's liquidity, while the divestiture of non-core units has allowed the company to focus on its core access network solutions and RUCKUS segments. The company's strong financial performance, particularly in Q2 and Q3 2025, with earnings exceeding forecasts by significant margins, has also contributed to the stock price surge. Additionally, the acquisition of Casa Systems' cable business assets has bolstered COMMSCOPE's position in the ANS segment, creating significant synergies. The advancements in DOCSIS-4 technology and partnership with Comcast have further positioned the company favorably in the evolving broadband market. Analysts have upgraded COMMSCOPE's stock, assigning buy ratings and noting significant recovery potential due to anticipated strong EBITDA growth and margin expansion. The upcoming launch of a unified products platform is also expected to drive sustainable double-digit EPS growth beyond 2026. These combined factors have led to a significant turnaround and robust appreciation in COMMSCOPE Holding Company Inc.'s stock price over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by increased net sales in key segments such as CCS, $376.7 million, and ANS, $147.2 million, as well as higher sales volumes and pricing increases in the RUCKUS segment. Additionally, growth was seen in specific regions including the US, APAC, and EMEA. On the other hand, revenue decline is primarily attributed to decreased net sales in certain regions such as CALA and Canada, lower pricing in CCS segment, and higher SG&A/R&D costs in ANS segment. These factors highlight the importance of regional and product-specific performance in driving revenue growth or decline. Net income and profit margins have undergone significant changes over the past year. Net income has increased by $1.2465 billion, with a notable improvement from a loss of $33 million in Q3 2024 to a net income of $108.4 million in Q3 2025. This trend continues for the 9 months ended September 30, 2025, where net income has increased from a loss of $322.3 million in YTD 2024 to $924.2 million. Profit margins have also seen an improvement, with operating margin increasing by 194.4% in 2024 compared to 2023. The 9 months ended September 30, 2025, saw an operating margin of 42%, up from the previous year. Net profit margin improved due to various factors, including increased depreciation and amortization, higher equity-based compensation, lower asset impairments, and improved operating performance. The reasons behind these changes in profit margins can be attributed to a combination of factors. Increased depreciation and amortization, as well as higher equity-based compensation, have contributed to the improvement in net profit margin. Additionally, lower asset impairments and improved operating performance have also played a significant role. However, it's worth noting that higher cash taxes paid partially offset these gains. The company is indeed generating positive operating cash flow, as evident from two key indicators. Firstly, the the net cash generated by operating activities for 2025 was a substantial $2,007.4 million, page 53. Secondly, the 12 months ended September 30, 2025, reported an operating cash flow of $788.5 million, page 56. These figures demonstrate a consistent and significant generation of positive operating cash flow, indicating a healthy financial position for the company. The company's debt level and interest expenses have undergone significant changes over the past year. Debt level. Long-term debt decreased by 21.5% from December 31, 2024 to September 30, 2025. The total principal amount of debt increased from $7,359.5 million to $9,358.5 million, indicating a net increase in debt. However, long-term debt at the end of period decreased from $9,238.4 million to $7,254.9 million. Interest expenses. Interest expenses for 2025 were significantly higher than 2024, with a total increase of $146.3 million. The interest expense for 2025 was $154.6 million, compared to $8.3 million in 2024. This indicates a substantial increase in the company's interest expenses over the past year. Overall, while there are mixed signals regarding the company's debt level, its interest expenses have increased significantly. The financial performance of various segments and regions within a company has been mixed. Notable performers include Ruckus, formerly NICS, CCS, Communication Solutions, ANS, Access Network Solutions, in Asia Pacific, United States, and Canada. These segments have shown good performance in terms of adjusted EBITDA, operating income, and net sales. On the other hand, OWN segment and DAS business unit, as well as CCS and ANS in certain regions, have underperformed due to divestiture or discontinued operations, net sales decrease, and increased operating losses. Europe, Middle East and Africa, EMEA, Caribbean and Latin America, CALA, and United States have also shown poor performance. The mixed performance of Ruckus and CCS highlights the need for further analysis to understand the underlying causes of these variations. Overall, while some segments and regions have excelled, others require improvement to achieve optimal financial results. Management is optimistic about the company's future outlook following the sale of the CCS segment. They plan to distribute excess cash as a special dividend, repay debt, and redeem preferred stock. The company is undergoing a transformation initiative called COMMSCOPE Next, aimed at driving shareholder value through profitable growth, operational efficiency, and portfolio optimization. This strategic shift will allow the company to invest in growth, reduce leverage, and maximize stakeholder value. However, management acknowledges that costs related to these initiatives may be material, but believes they are necessary for long-term success. Acquisitions and divestitures. Overview. Amphenol has made a significant acquisition in the form of COMMSCOPE's CCS segment, marking a notable expansion of its operations. The acquisition is valued at $10.5 billion, with Amphenol purchasing the CCS business unit from COMMSCOPE. In contrast, COMMSCOPE has undergone divestitures, selling off its CCS business unit to Amphenol. This transaction represents a major shift in the company's portfolio and marks a significant departure from its previous operations. The company has a history of paying dividends to its shareholders. Specifically, the total dividends paid for the 9 months ended September 30, 2025, amount to $51.3 million. Additionally, dividends on Series A convertible preferred stock were also paid, totaling $34.6 million for the 3 months ended September 30, 2025. Concerns about inventory buildup and supply chain disruption are evident in the company's financial summary. Inventory buildup is a significant issue, with excess and obsolete inventory charges totaling $19.5 million in the home business. Additionally, raw materials, work in process, and finished goods inventories have increased, indicating potential inefficiencies in the company's inventory management. Supply chain disruptions also pose a threat to the company's operations. The long-term supply contract entered into to secure raw materials may not be sufficient to mitigate the risks associated with advance payments totaling $120 million made through 2026. Furthermore, the loss on disposal of retained inventory at cost or market price suggests that the company is struggling to manage its inventory levels. The company has acknowledged these concerns and has implemented a manageable plan to prepare for potential impacts related to tariffs. However, more needs to be done to address these issues and prevent further disruptions to the supply chain. That concludes the financial summary for COMMSCOPE Holding Company INC. Feel free to comment below, and I will be happy to answer them when possible.